and which is very easy. First of all, you are having two different strategies. The first one is the pre-open market strategy, which is the gap up and the gap down strategy. Second one is the mean average. And the stock selection is different for both of them. So I'm starting with the stock selection for the pre-open market strategy, which is for the gap up and the gap down, which is very easy. For that, you will be opening the NSE's website at 9:10 a.m. in the morning. After opening the NSE's website, you'll go to live market. Here you can see there is an option which says live market, and you will be opening the pre-open market. So here, after opening the pre-open market, we will be checking the pre-open order collection closed. Then the first step is to check the advances and the declines. Here you can see advances are 0, declines are 50. So clearly the declines are more than the advances. So in case the advances are more than declines, that means today is a gap up day. The market is going to give you a gap up opening. So when the market is giving us a gap up opening, you are only supposed to trade in a gap up. You are only supposed to trade a gap up, no gap downs on this day. And suppose the declines are more than the advances, which is the current scenario. That means this is a gap down day. On this day, we will be only trading a gap down stock, no gap ups on this day. This is your first rule. So which clearly means on the last trading day, we were supposed to do a gap down. So after judging this, in case it is a gap up, suppose today is a gap up opening, you will be doing a gap up. You will be simply selecting the first 5 stocks or the first 10 stocks from the Nifty 50 stocks as well as from the F4 stocks. In case it is a gap down, you will be simply selecting the last 5 stocks, last 5 from the Nifty 50 as well as the F4 stocks, in total 10 stocks. After selecting this, again go to the live market and open this list, which is the advances and declines list. After opening this list, here you can see, after opening this page, you can see the list here. And first of all, this list will be updated at 9:16. So wait for the updation. And you will be matching the two scenarios. The two scenarios means the scenario on the previous page. If you remember, on the previous page, declines were 50, advances were 0, declines were more than the advances. Here you can see declines are 1342. Red means declines, green means advances. So declines are 1342, advances are 554. Again, the declines are more than the advances. So the two scenarios match. When the two scenarios are matching, that is a trading day. It is a trading zone. You can trade. In case there is a contradiction, that is declines are more on the previous page and here advances are more than the declines, that means this is a contradiction. The sentiments are not matching. After the opening of the market has suddenly changed the sentiment with which it was opening, which means this particular gap up or this particular gap down is now going to reverse. So you won't be taking any trade in the first place. So the third rule is the advances and the declines must be having a clear difference. Like here right now you can see they are having a clear difference. Clear difference means a difference of more than 100 points. So here you can see the difference is around, I think, 800 or 900 points, which is a clear difference. So this is again a trading zone. In case the advances and declines are approximately same. Approximately same means they are not having a clear difference. That means the market is not having any clear sentiment, which is again a no trading zone. You are not supposed to trade. The market is very volatile. So this is your second rule. The third rule is, here you can see the unchanged stocks. Here you can see the advances is on the first number. So 554 is the advances. Declines on the second number. 1342 is the declines. Unchanged on the third number. So obviously 84 is the unchanged stocks, the stocks which are not having any change. In case the unchanged stocks are 560 or more than 560, that means the market is flat, no movements at all. The market is not having any volume, which is again a no trading zone. So these are the rules, these are the things which you will be checking for a gap up as well as for the gap down. And the second thing is the stock selection for mean average, which is very easy. I have structured it in a very easy way. Here you can see the first step will be, suppose you are finding out a mean average trade. Suppose it is 10 o'clock or 11 o'clock or 12 o'clock or 1 o'clock. What you will be doing is you will go to the live market. You'll open this option which is index. After opening the index, the first step is to check which sector is giving us the movement. That is, there is always one sector which is giving you movement. There are sometimes there are two sectors or three sectors or even four sectors. You know, when the index is moving, there is always a single sector which is moving it, or two sectors or three as well. That is, you must have noticed that even if the market is very volatile, even if the market is flat, there are some stocks which are always giving you the movements, or they are always 5% up or 5% down. Clear movements we are having in such stocks. So we will be finding out such stocks, that is, you will be checking which sector is giving you the movement. For example, on the previous, or you can say on the last trading day, Bank Nifty was moving, it was 2.21% down. Movement we are looking for intraday, doesn't matter positive movement or negative movement. We will be booking the profit in both the cases. So here you can see Bank Nifty was 2.21% down. So this sector is moving. Then financial services was moving. Metal was moving. PSU Bank, Pharma, these all were moving. So you can choose these stocks. That is, I can provide your watch list, which is having the best stocks from all the sectors. For example, suppose Bank Nifty is moving, you have figured this out. So you can select ICICI Bank, Axis Bank, Indus India, and all the banks you can select. So you are only having three or four stocks to find out the entry from, which is very easy. Here you can see an example for ICICI Bank on the last trading day. You can see those stocks will be giving you clear movements. You can see wherever the lows of the previous consolidation are broken and a small and safe red candle is formed and closed. So this was the shorting trade. So suppose we shorted the stock here, sold the stock here at 373, which was your entry, and bought it back here, which was your exit at 368. 5 points we have booked very easily. So this is how you can select the stocks for mean average. So simple it is. So this is your stock selection for gap up, gap down, as well as for mean average. Okay, any doubts with the stock selection first of all? The stock selection which I have just explained you. Any doubts with that? Then I'm starting with the MACD.
Ma'am, suppose if you have said that banking is moving, so we have to select the top movers on that sector, or
No,
we can take any
any
random
stock,
banking stocks.
any stock, all the banking stocks, all the stocks from my
Okay,
watch
so and
list which are included in the Nifty Bank.
okay,
So for moving average, are we not checking the individual volume of, I mean, top
For
five?
stock selection, no sector is already moving. For the top five in gap
Mhm.
up, gap down, in pre-open volume is automatically there. It is there by default. So no need to check the volume.
so ma'am, we will not consider that 60 lakh volume criteria which you have said earlier
You can
in
do that as
the
well.
recording.
That is a different way of selecting the stocks if you observed. This is a different one.
Okay,
Any one of the two you can go for. This one is working better right now.
okay, all right. And ma'am, one more thing, you have said that if unchanged stocks is 560 or more, so any specific reason why this 560 number is there?
Because you can see the total stocks are around 2000 approximately. So even if 560 are not having any change, they are not moving, that means a flat market. That is a flat market. So majority of stocks are
Okay,
not moving, which is a flat market.
all right. Okay, okay, thank you.
So the next thing is MACD. So as I told you in your previous class, if you remember, that the strategy is not complete. We will be adding one more indicator, which is known as the MACD indicator. Here you can see, which is the moving average convergence divergence. And we will be using the default settings for this. That is, you just need to apply this. And this indicator we are using for checking out the strength of the trend. Strength of the trend means some trends will be having strength, some of them won't be having strength. The trends which won't be having the strength, they will be reversing, they will be the false signal like this one. Here you can see, in case you think that this is an entry, this is not in the first place. Here you can see the highs are not broken by the candle's body. But just in case you find out some false signals, for refining them, for confirming them, we are using this MACD rule. MACD rule, which is you will be analyzing the MACD on the 5-minute time frame. For analyzing the MACD, you will be using the 5-minute time frame. For entries, we are using the 1-minute time frame only. You are finding out the entries in the same way. Using the 1-minute time frame only, the entry is the same. We are just confirming this entry using the 5-minute time frame. For that, we are having two simple rules. So the rules are, here you can see this is MACD, and this is the last trading day, which was 4th of September, which was yesterday. So here you can see MACD is these two lines, which is telling you about the relation between the two moving averages which we are using. They will be telling you about the strength of the trend. So two simple rules we are having, which is if the MACD is moving above zero, that means, or you can say, we will be just confirming the entries like this using the two simple steps. That is, in case you are finding out a buying entry on the 1-minute chart, make sure MACD is moving above zero. In case you are finding out a selling entry on the 1-minute chart, make sure MACD is moving below zero, then only your entry is correct, then only the entry is having strength, then only the trend is going to continue. And just in case, when we are choosing only 3 stocks or 4 stocks, in case you are able to identify that MACD has just crossed below zero or above zero, so that particular stock is likely to give you a selling entry or a buying entry. So you won't be missing on the entries. For example, you can see here, if you remember, for the ICICI entry which I just showed you, You can see on the 1 minute chart, the entry was at 373. You can see the time, it is 2:28. So I just need to confirm at 2:28. Now this is a selling trade. So I will be just confirming at 2:28. MACD must be moving below zero on the 5 minute time frame. And here you can see it was moving below zero only throughout almost all the day. And here you can see at 2:10 it has crossed zero, and 2:28 it is moving below zero only. So which means your entry is correct. So this is how we will be using the MACD, using the, or you can say for refining the false signals, for confirming the entry if it is correct or not. And this is your MACD rule which you need to use along with your strategy. For example, I can give you another example as well. Bajaj Finance, as you saw, financial services were also giving us the trend on the last trading day. So you can see here. So okay, I'll show you a clear entry, more clear entry. I'll find out one. Your Bajaj Finance, you can see. See. So financial services were moving. Here you can see wherever the lows of previous consolidation are broken and a small and safe red candle is formed and closed. Entry is at 3,614. Made a low of 3,575. Profit is achieved. Entry was at 232. So I just need to confirm, now this is a selling trade, that on the 5 minute time frame at 232 MACD must be moving below zero. So you can see from 225 itself it is moving below zero. So which means my selling entry is correct. Or you can say after 225 you will be only getting a selling entry in the stock. In case you feel that there is some buying entry, that is a false signal. In case you feel that there was a selling entry before 225, that is also a false signal. So this is how we are going to confirm. You can say we are going to confirm if the entries are correct or not. Different time frames why we are using, that is because 1 minute we are using for finding out the entries for intraday, because in intraday we are capturing the fast movements or the fast trends, whereas if you are using a lower time frame, there can be many false signals, like here in case you felt that this was a selling trade, this wasn't, this was a false signal only. You can see it reversed, or you can say the stock was consolidating only. So just to eliminate all these things, we have to use a higher time frame which actually gives you a signal which is with respect to the longer time period. That is, we are using 5 minutes. So that is confirming the signal which you are getting in a smaller time frame, which is 1 minute. So higher time frames are used for confirming the signals in case you are using a shorter time frame for trading. So this is the reason we are using two different time frames. I told you in your strategy class as well, we will be using a higher time frame for confirming or for eliminating the false signals. So this is your MACD rule. Any doubts with these? With this is just a single rule, a very simple rule.
Ma'am, one question here. You said we will be using MACD for 5 minutes. Can we use, I mean, as per what you have said is first we will look at into the 1 minute chart, and if it is giving a
Perfect.
signal, then we will confirm it using MACD, right?
Yes.
Right, that we shortlist a stock which is above zero for buying or below zero for selling,
No. First of all,
and which has,
find out the
it is
entry on the 1 minute time frame, then confirm it.
okay, all right. And there is no exception for it. I mean, if we confirm it using
No
1 minute,
exception.
sorry, if one
If
minute
your
is
entry
giving a
is
signal, then
correct, Yes, if your entry is
Okay,
correct, this MACD rule will follow. In case your entry is correct, then you will be obviously that is an exception only, that is a wrong entry.
right. So both should be in sync. MACD 5 minute
Yes,
signal as well as the 1 minute signal.
yes.
Okay, ma'am.
So these are the first two things. The third thing, now I'll notify this to you. Most of you are supposed to paper trade from Monday. Complete all your study material. I am yet to send you some more. I will be sending that to you. Take your time. Once you are done with all the revision, once you have understood all the things, we are trying. We are starting to try, just trying. Like supposingly, I just selected a sector. I know Bank Nifty is moving today, so I will be just tracking banking stocks. In case you're finding out an entry, you can simply write it on a paper. That is, I was selling ICICI Bank at this price, or you can say I was selling Bajaj Finance at this price, at so price. And you will be holding it the same way you will be holding it for your real trades. You will be writing down the exit. You will be sharing that with me. I will be correcting all of your entries, all of your trades. Start journaling them. Write down all your mistakes which you are making. We will be writing all each and every mistake so that we are not repeating that. This is what you need to do for the people who will be starting paper trading. For the people who have done paper trading, I am just explaining you the order placement in brief. I will be sharing the order placing videos in detail. They are made in live market. I have shown how to place order. I have shown how to exit from that. So here you can see, suppose I'll take ICICI Bank only as an example. So here you can see, suppose I want to trade in ICICI Bank. So that depends on you. In case it is a buying trade or in case it was a selling trade, like I showed you the selling trade. So this was a selling trade, or you can say this was a shorting trade. So I will be clicking on the selling option, not on the buying option. So after clicking on the selling option, you will be choosing the cover order. We are always supposed to trade using the cover order. That is because using the cover order, you do not need to define your target. Using the bracket order, you need to define the target. So that is the reason we are using the cover order. And there are only two ways to trade using margin in intraday, which is the first one is bracket, second one is cover. So we are choosing cover order. So after choosing the cover order, the first step is to choose market. Market means at market price you are placing the order, whatever is the market price. Like here you can see for NSE the market price is 372.5. So I will be placing the order at this price. The second option is limit. You can place a limit as well, a limit order as well, but that is having a catch. That is, in case you are selling a stock, you can only place a limit on a price which is higher than the current market price. That is, the current market price here you can see is 372.5. So I can only place a limit at 373, 374 and so on. And in case you are buying it, you can only place a limit at a price which is lower than the current market price. That is at 372, 371 and so on. So there is a possibility that your order is not accepted if that particular price is not achieved or triggered. So that is the reason the best thing which you can do is to place order at market price. So you will be choosing cover order along with market. So when you are choosing this, there are only two options. The first one is the quantity, which right now is going to be only 2 stocks, 3 stocks, maximum 5 stocks, because we are just trying right now. And here you just need to place your stop loss, and you will be placing the order, you will be confirming it. Once you have placed the order, you can exit it from your orders option. That is, when you will open orders, you will see it will be written ICICI Bank 5 stocks at whatever cost price, and there will be this option, the option which you need to click on, and the first option will say exit. So if I'm selling a stock, exit means exiting from the selling trade, the profit or the loss will be booked. If I'm buying the stock, exiting means exiting from the buying trade, profit or loss will be booked. And there is another option in your positions, that is in case you go to the positions, it will be showing you the current position of your trade. Current position means, suppose I have bought a stock at rupees 100. Now right now the stock price is 105, so it will be showing me the position which is plus 5 rupees, or in case I'm placing a single stock, that will be plus 5 rupees. So again there will be this option, which is the option. You'll click on that, and that will say, or you can say there will be an option which says modify. So when you will click on modify, this tab is going to open again. Now you can't modify the quantity was a single stock only, we can't make any changes in that. You can't modify the price on which you placed the order, that can't be modified later. The only thing which you can modify is your stop loss, which you can keep on trailing in case you know suppose, just giving you an example, suppose I'm selling the stock here at 100 rupees, stop loss was 101. So here first of all I placed the order using 101. Suppose now the stock price is 95, now my stop loss is 96, so I will be modifying it to 96. Again, suppose now the stock achieved 90 rupees, now my stop loss is 91, again I'll modify it to 91. This is how you will be placing the orders. I have shown you all this in a class which I will be sending you, the people who are willing to place the orders from Monday. In case you are yet to start with the paper practice, you will be just writing down your trades, you will be journaling them. Samples for that I can send. That is the people who are already trading, I can send some paper trade samples. You can go through them. You will be just paper trading like that till you are profitable, till we are correcting all your mistakes. Then only you will start practicing with low quantities. Once you are profitable on 2 stocks, 5 stocks, or 10 stocks, then I will be teaching you how to calculate the position sizing, how to calculate the number of stocks on a particular capital. So right now we are just targeting on being profitable, nothing else, correcting the mistakes. We are trying right now. You need to gain some experience right now. I have given you the knowledge. Experience gaining is on you only. So that is something which you have to do on your own. That is something which you will be doing yourself. So I will be sending you everything, all the study material, everything. Right now you can ask your doubts in case anyone is having any doubt with these three things, or any other doubt which you were facing while practicing. Any doubts, anyone?
Ma'am, in case of paper trading, you said we need to start generaling them also. So,
Hmm.
is there any specific format or any Excel sheet where we need to put in our
Yes, you
trades,
can
or
make.
it's
That depends on you. Suppose this is the ICICI bank trade. So you just need to, for me, you just need to write down the entry time and the entry price and the exit time and the exit price. Rest all other things depends on you, the add-ons.
okay?
You can write your stop loss.
All
You
right.
can start calculating that. Some people actually start calculating that using a image. You can say they imagine a capital, that is supposing we are having an investment of 10,000 or 20,000. They start calculating like that, or whatever you want to do. I just need to correct the trades right now, nothing else.
Okay. All right.
No, this option is not in the trading platform. You can use the Excel sheet. Use Excel. You can use a notepad in your phone. Just write down the name of the stock wherever you are finding out the entry. Suppose I found in ICICI, I'll write ICICI entry price. Entry price was 373. I'll wait for the other candles to form. Wait for your exit. Suppose I'm exiting on this rosy. I write the price which was there at that particular time, around 370 or 369. I will be writing that. So just that. I just need to recorrect so that I can, correct your mistakes after the market in case I'm going through the paper trades. That is the motive of doing this. Or you can write down in my chat option as well. Some people are doing this whenever they are finding out the entry, they are writing paper trade and date and they are writing down the entries in my chat itself. Any other doubt, anyone? Yes.
Hello. Good evening. Good evening, ma'am. Ma'am, I
Yes.
need to practice on the previous charts. On the previous charts till now.
So, did you understood MACD?
Yes, ma'am. Yeah.
Okay. Stock selection is okay with you.
Yes, ma'am.
So you can do in live market. In case you think that
Okay.
the past practice is okay. In case you think you need more past practice, you can continue with that till you are satisfied. Once you are satisfied, you can start with the live one.
Okay, ma'am. Ma'am, for the live sessions, you told me uh, to do the practice in the up stocks in the application, and the live market will be continue in the up stocks.
Yes. You just need to open your DMAT at that particular time. Suppose you want to practice gap up, gap down, be available at 9:15, choose the stocks, start watching out stocks. Some days it is going to take to make up the speed as well. So suppose there is a gap down in Infratel, I will be watching Infratel, the first candle, the second one, third one. Once the rules are satisfied, that is the highest broken and a small and safe green candle is formed and closed. That is my entry. You will be writing down the price like that.
Okay.
So when we check the indices for movement, is it for gap up? Only for mean average. That is only for mean average. For gap up, gap
Okay.
down, I have told you the stock selection, which is the first 5 or the first 10 stocks or the last 5 or the last 10 stocks.
Yes. Yes.
Reversal, how to determine the reversal? I told you, ma'am, the reversal. This is a reversal. This is dozy. So this is the sign of reversal. Or you can hold it till the proper exit.
Ma'am,
You
apart
can
from the up stocks
practice
application,
the
which sorry.
reversal. You can practice the reversal symbols on charts and send me. How to eliminate the stocks from, suppose I selected 5 stocks. I'm, going through them. There will be some stocks which are having unsafe candles. Eliminate them. Any stock which is having big candles or big shadow, eliminate them. Any stock which has already given you the entry, like ICICI Bank, when I was watching it, I found it here. Eliminate it. Already given the entry, so you are late. Then any stock which is likely to give you the entry, keep it. Like this, you will be eliminating. A particular stock is volatile by the type of candles. Type of candles means big candles, big shadows. That is volatile. So when you are choosing the stocks using the sector, any stock which is having big candles or big shadows, eliminate that. That is volatile. No, you can't practice on NSE website. Use the stocks charts only. NSE charts are not good. So I will be sharing some more study material in case you have already received it. That is okay. Just, WhatsApp me what all sessions you are having. Then I'll share accordingly. Yes, trading view is good. In case you are able to apply all the indicators. In case you are not able to, I can help you with that also. I'm having a video for that. Trading view is very good. As a platform, it is very good in case you are using that. And in case you are practicing right now with the past charts, keep on doing that. I just kept this session for your doubts. That is up to you only. Whenever you want to start paper trading, once you are clear with everything, then only start paper trading and keep on clearing all the doubts as well. Yes.
Ma'am, in trading view, the trailing stop loss indicator is not available. That's
Yes,
what I have
it
checked.
is. It says ATR stops. I'll send you a
ATR
video
stop.
I'm having. Yeah, you can apply that using after watching that. It is available. Just the name is different.
Okay, okay, ma'am.
No, it's not. If the first candle is rosy, eliminate it. I think all is done. I will be sharing this session as well. I have recorded it. Go through it with a lot of, patience. Go through the other study material as well. Then again, you can come up with your doubts anytime and every time. I will be clearing all of them. We are trying right now till you're profitable. We'll keep on working on it. If the candle is big in size, then also we eliminate. Yes, we do. For gap up and gap down. Okay, so right now the Zoom time is over and I think the doubts are over as well. So in case you are having any other doubt, kindly WhatsApp me. I'll clear that. I'll share all of the things with you.
Okay. Thank you, ma'am.
Okay, I'll
Thank you.
share
Thank you,
this
ma'am.
as well.
And happy Teachers Day, ma'am.
Thank you.
Happy Teachers Day. Yeah.
Thank you.
Happy Teachers Day, ma'am.
Thank you, everyone. So I will be sharing everything with all of you. Please go through that. And from Monday, most probably, we can try some paper trading. Thank you. Then
Sure.
I'll
Okay.
notify you
Thank you.
about the next
Good night.
schedule as well. Next will be swing, which is very, very easy.
Okay. Okay.
Thank you, ma'am. Take care. Bye, ma'am.
Okay.